You are listening to ChartingWealth.com for Wednesday, the 22nd of June, 2016. What do we have going on? Well, we have an up candle, our first up candle that's finished off in the last 8 days. We had 3 strong down candles on our total market. That is IYY as the symbol. It is the iShares Dow Jones U.S. Total Market Index Fund. The way we always start tells you what's going on in the total market. It is an up candle, but we do not have a crossover going up. In fact, our derivative oscillators continue to accelerate down, and the MACD and signal line continue to diverge and move in a downward direction also. In fact, the market itself was down 0.19% for the day. We are looking at a 2-day candle, not a 1-day candle. The 2-day candle, the reason it has a long wick is because of that down movement over the course of the day. Now, if we look intraday, what do we see? Well, the 4-hour chart, that is the half-day chart, shows us down movement in the morning, some recovery in the afternoon. Again, these are our Hinken Ashi type candlesticks. Put out some good training yesterday on Hinken Ashi. You can find those both at iTunes and on YouTube, and of course at chartingwealth.com. We did have a crossover in the afternoon going up on the 4-hour chart, which means that we have a backup that has been signified by that movement in the afternoon. So an official backup on the down movement on the 2-day candle. So this is the backup on the short chart we've been looking for, waiting for a rotation back over, if indeed that occurs, to show us more downward movement where you can jump in. So be paying attention, looking for that. That's where we are in the total market. Now we're going to go back to the 2-day chart. We're going to take a look at the S&P 500. It is touching the 2-day trend line on the 2-day chart. Again, just like the total market, we had a crossover going down on the 17th. The 21st candle that was completed on Tuesday the 21st is a hammer, again showing us indecision. We've got a large wick on the top of it compared to the smaller body of the candle itself, a green open box, again touching the 2-day trend line. Derivative oscillators continuing to accelerate down, and the MACD and signal line are moving down and not converging. They're diverging from each other. Now let's go and take a look at the 4-hour chart. What do we see? We see there's a huge bump up back on the 20th in the morning, then down candles in the afternoon of the 20th and the morning of the 21st, and then some up movement. Again, the 4-day candle closed below the 2-day trend line. The wick did touch it. We did have a crossover in the afternoon going up on the 4-hour chart, and the derivative oscillators in the positive. So that backup has occurred. Let's see if it rolls back over and gives you an entry point in a down move. Now again, for those who are new to the broadcast, remember, you can make money when the market rolls over and goes down because they're inverse funds. SPY is the symbol for the SPDR's S&P 500. It tracks that index of stocks, 500 big companies, lots of volume in the market. They're also inverse funds that go up when the S&P goes down. That's what we're talking about, getting into an inverse move. The trick is being able to read the charts. If you can read the charts, you're able to invest and or trade when the market's going up or down. That's why it's so key to know what's going on. We have so many choices today. Now, again, we're not a stock calling service. We're an education firm. We want you to pay attention, learn how to read these charts, and then when you get good enough, you can make your own decisions in the future. So please train with us every single day. Watch our videos. Follow us every day on this broadcast. We come to you every day the market's open, plus our weekly review and forecast. You can get all that by simply going to chartingwealth.com and signing up for our newsletter. Plus, you get our overview every day. In addition to that, you get our layout from freestockcharts.com. And in addition to that, you get our link to how to read a stock chart video that'll get you started in what we do. All right. Let's go back to the 2-day chart. Take a look at the Qs. What's the Qs? Well, that's the NASDAQ 100. It was up 0.28%. Again, the S&P 500 up 0.25%. Total market down 0.19%. We again, similar to the other two charts, we see the small candle up on the 2-day candle touching the 2-day trend line, having had 6 days of down movement on 3 2-day candles. This last candle, a little bit of up movement. Again, for the day, 0.28% for the Qs. Continue to see the derivative oscillator accelerate going down. That is getting bigger. And the MACD and the signal line continue to move down and staying apart from each other. If we look at the 4-hour chart, what indeed do we see? We see it slipping sideways over the last 2 days. We see the derivative oscillators flipped over into the positive. Unlike the other two charts, we don't have a crossover going up yet on the 4-hour chart. Now, lastly, we're going to take a look at gold. What do we have going on with gold? Well, as the market has been going up on all 3 of our indexes, gold has been going down, broke through our 2-day trend line. We have a filled-in red down candle with a down wick, a little bit of an up wick. Derivative oscillator was in the positive, lost some of its speed. We have a kink over in the MACD, actually moving closer toward the signal line. A converging hasn't crossed over yet. May still be some time before and if that happens on gold, but a big move over in gold. Again, almost a 2% down move throughout the course of the day. We look intraday to see what actually occurred there. Lots of down movement in the morning, followed by down movement again in the afternoon. Remember, gold crossed over going down back on the 20th, the morning of the 20th. That was Monday, and has continued to accelerate down since then. That is a backup. We can wait on gold and see if indeed it moves back over and parallels the still sustained up move on the 2-day chart. That is where we are. Continue to pay attention to these markets every day with us. Track them with us. Set up your own charts. Feel free to use our layout. Make sure to save it. We give you instructions when you get all those emails from us every day. Gives you instructions on how to use our layout. Please make sure to save it so you don't have to upload it every day. Use it. Follow along with us. If you can't do that, at least listen and practice. Practice trading is so important. You can go to any of the online brokers. You can set up your own virtual trading account, make yourself a virtual millionaire. Practice, practice, practice. But remember, it's perfect practice that makes perfect. Don't be afraid to take chances and risks with virtual money. Experiment. Get good at this. Really work on it, because I'm telling you, if you can figure out how to read the charts and you can get good at it, the world is your oyster. It's like the roadmap to everything. Thank you so much. We love to hear from you. Follow us again, Facebook, Twitter, Instagram, YouTube, iTunes. If you really want to help us out, become a subscriber on YouTube. When we get to 1,000, and we're getting closer every day, thanks to you guys, we'll be able to do proprietary broadcasts. In addition to that, iTunes, please go subscribe to our daily podcast and our weekly video podcast. Whatever you do, please give us a 5-star rating there. Say something nice on iTunes. It really helps us with the metrics. We appreciate you. We hope you appreciate us. God bless. Wish you the best in learning how to read these charts. Thanks so much from chartingwealth.com.